Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically what's going on with the value of the ruble. Now, the reason that I'm posting so many videos talking about the ruble is because it's the only piece of live data that we have available to us to see what's going on in the Russian economy. The Kremlin has severely restricted the amount of information it's prepared to share with the West. And so the only pieces of data that we really get now are inflation, interest rates, the ruble, and some data on manufacturing and exports when it's released. And what we've seen over the course of the past 24 hours is that the ruble has continued to fall in value. And on the 1st of October, it fell to 96 against the US dollar. And this was the lowest point that it had traded at any time in the last 12 months. And when you look at what's been happening over the course of the past 5 years, the average price that the ruble was trading at prior to the invasion of Ukraine was around 75 to 1 US dollar. So 96 represents a significant fall. And this is obviously seriously bad news for Russia because it's dealing in the international markets. So in today's video, we'll have a look at exactly what's been happening to the value of the ruble over the course of the past few days. We'll check out what's happening with the exchange rate against the Chinese Yuan and the Indian Rupee, which are now two of the most important currencies from Russia's perspective because they're the countries that it's doing most of its trade with. We'll talk about why the value of the ruble is crashing now, why it's suddenly started to deteriorate so rapidly, and what the implications of this are for the Russian economy. And then finally today, I'll wrap up with my summary as to what I think is going on here, what's likely to happen over the course of the next 3 to 6 months, and what this means in terms of the Russian economy. But before we get started on all of that, I'd like to say thank you so much to everyone that's supporting the channel. If you're a long-term supporter, either through Patreon, YouTube membership, or Buy Me a Coffee membership, thank you for that long-term support. Really does help to motivate me. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort and the generosity. Really means a lot to me. As we've discussed previously, the value of a currency is usually directly related to the strength of the economy. If your economy is doing well, if your companies are doing a lot of trade, then that means that lots of other companies and countries want to do trade with you. Therefore, the demand for your currency is rising, and so the value tends to go up. However, if your economy isn't doing well, if your companies aren't doing a lot of trade and therefore nobody wants to deal with you, then the demand for your currency goes down, and so does the value. And that's what's been happening to Russia over the course of the past 2.5 years. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the course of the past 12 months. And what this shows is that the current rate that the ruble is trading at more than 95 to 1 US dollar, is the worst that Russia has seen since October 2023. Which in itself would be worrying. However, if we zoom in and have a look at what's been happening over the course of the last 6 months, you can see that in the period between April and June 2024, the value of the ruble was actually appreciating. And on the 19th of June, the ruble hit a 12-month high of 83 against the dollar. However, over the course of the past 3 months, we have seen a significant fall in the value of the ruble. And on the 1st of October 2024, the trading value fell to 96 against the US dollar, which represents a fall in value of 14% over the past 3 months. And if we zoom in and have a look at what's been happening over the past month, you can see that on the 3rd of September, 1 US dollar was trading for 87 Russian rubles. So over the past 30 days, the ruble has fallen by 9.2%. And if we zoom in further and have a look at what's been happening over the past week, you can see that this time last week, the ruble was trading at 92.7 against the dollar. So the fall in value to 96 on the 1st of October represents a 7-day fall of 3.6%. Now, as I said at the start of today's video, the most important currency for Russia at the moment is the Chinese Yuan. And this chart shows the movement in the exchange rate between the yuan and the ruble over the course of the past 12 months. And as you can see, the shape of this chart is very similar to what we've just looked at for the US dollar. On the 19th of June, which was the recent high trading point for the ruble, 1 Chinese yuan was trading for 11.4 rubles. Today, it's trading for more than 13.5, which represents a fall in value of the ruble over the past 3 months of more than 18%. And as you can see from this chart, the current exchange rate is the lowest that the ruble has traded at since October 2023. And if we widen the scale of this chart to show the position over the past 5 years, you can see that the current level is one of the worst that the ruble has ever traded at against the Chinese yuan. If you exclude the huge spike in value that we saw immediately following the invasion of Ukraine, the current rate is one of the worst in Russia's history. And just to round things off, this chart shows the exchange rate of the Indian rupee against the Russian ruble over the course of the past 12 months. And as you can see, it has exactly the same shape as what we've just looked at for the Chinese yuan. So the fall in the value of the ruble is across the board here. This is happening against all currencies. It's not just because the dollar is strengthening or the yuan is strengthening. The Russian ruble is falling in value because of what's happening in the Russian economy. So why has the value of the ruble fallen so rapidly over the course of the past 3 months? And why is it now accelerating? Well, I think the reason for this is because the Russian economy is now struggling to be able to keep juggling all of the balls. Over the course of the last 2.5 years, Russia has been hit with a huge wave of sanctions, and it's had to change all of its trading partners. Prior to the invasion of Ukraine, its biggest single market was Europe. That was where it was selling most of its oil and gas. But the vast majority of European countries have now joined the sanctions, so they don't want to deal with Russia. And Russia has had to pivot and start selling huge quantities of oil and gas to China and also India. So that's represented a massive shift from Russia's point of view. And one of the problems that Russia initially encountered was that it was having to offer huge discounts to both of those countries to encourage them to do that trade. Now, those discounts have actually narrowed over the course of the past 2 years, and you would think that the Russian economy would have bounced back. However, over the course of the past 3 months, what Russia has experienced is that the West has started to tighten the sanctions. And the USA particularly has threatened both India and China with secondary sanctions if they're found to be dealing with counterparts in Russia that are on the sanctioned list. And what that's resulted in is a slowdown in the payments, and in fact some of the payments just aren't being made at all. So Russia is currently experiencing a huge cash flow crisis. It's not being paid for all of the trade that it's doing. And what that means is that all of the companies and also the government and the central bank are now having to be really cautious about what they do with the available cash flow that they have. And the Russian central bank is now having to prioritize what it's doing with its cash, and so it's cutting back on the purchase of rubles. So it's not able to manipulate the value of the ruble in the same way that it was 6 months ago. And that's one of the major factors why we're seeing a fall in the value of the ruble. The other factor is because the Russian economy is struggling. And as I said right at the start of today's video, if your economy isn't doing well, if it's not booming, if lots of other companies and countries don't want to trade with you, therefore they're not having to buy your currency, then the demand for your currency falls and so does the value. And what we've seen, particularly over the last 12 months, is both China and India have refused to deal in rubles. They're saying, we will do trade with Russia, but we're not going to pay you in rubles. And of course, what that means is that the demand for ruble has fallen, and so has the value. So what are the implications of the fall in the value of the ruble from Russia's point of view? Simple economics tells us that when the value of your currency falls, it increases the cost of all of your imports. So if we take a very simple example of an item that costs $1, 3 months ago, $1 was trading for 84 Russian rubles. So if you were importing that item, you would be selling it in Russia, excluding any profit that you're adding on top, for 84 rubles. If you're importing that same product today, it still costs $1. So the cost hasn't actually changed in the international markets. But you'll have to sell that product for 95 rubles because that's the current exchange rate. So from the consumer's point of view in Russia, when they go to the store, something that was costing 84 rubles 3 months ago is now costing 95. So that represents an increase in the cost to Russian consumers of over 13%, despite the fact that the real cost hasn't actually moved at all. It's still $1. And that's one of the reasons why Russia is now experiencing high levels of inflation when the rest of the world is seeing inflation starting to slow down. So this isn't a global phenomenon. We're not seeing prices rising all across the world like we were 2 years ago as we came out of the COVID-19 pandemic and then Russia's invasion of Ukraine drove up the cost of commodities. This is a specific issue for Russia, and one of the reasons for it is because of the fall in the value of the ruble. And this is causing major problems for Russia because inflation is an increasing issue. Over the last 12 months, we've seen inflation rising in virtually every single month. And that rise in inflation has caused the Russian central bank to have to step in and increase interest rates. And of course, an increase in interest rates means that it increases the cost of borrowing. So if you're a company or an individual in Russia that has to borrow money, it's now a lot more expensive than it used to be. 14 months ago, the interest rate in Russia was 7.5%. Today, it's 19%. So it's more than doubled over the course of the last 14 months. And of course, that's going to add a huge amount of cost to anybody that's got debt. And all of that is bad news for the Russian economy because it means that companies will be reluctant to borrow. Therefore, they're unlikely to invest more into their infrastructure and their business. And this really slows down Russia's growth. So the fall in the value of the ruble is directly linked to what's happening with inflation, which is directly linked to interest rates, which are directly linked to how much people are borrowing, which is directly linked to investment and therefore the growth of the economy. So you can see why the falling value of the ruble is really bad news from Russia's point of view. Now, in terms of exports, normally when the value of your currency falls, it makes your products more attractive to the rest of the world because they're now cheaper. They're on the other side of that equation. If you're an international business and you're purchasing something from Russia that costs 84 rubles, 3 months ago that product would have cost you $1 to buy. Today, that same product would only cost you 88 cents because the value of the ruble has fallen in the exchange rates. So you would think that that would represent an opportunity for Russian exporters. But the problem for the majority of Russian export businesses is that they're dealing in commodities such as oil and gas and coal. And those markets are not being priced in rubles. As I said right at the start of today's video, nobody wants to trade in rubles. So all of those contracts are being struck either in US dollars or Chinese Yuan or Indian rupees. So the fall in the value of the ruble isn't actually benefiting Russia as much as it would if those contracts had been struck in rubles. So Russia is seeing lots of downside at the moment in terms of its imports and no real upside in terms of its exports. So the overall impact of the falling value of the ruble is having a hugely negative impact on the Russian economy. So what's the summary and conclusion today? Well, I wanted to post this additional video on the value of the ruble because it's falling rapidly right now. Now, the Russian central bank may well step in and try to bolster the value over the course of the next 24 hours. So please don't send me any messages if the value has moved since I've actually made this video because exchange rates are live and they change constantly. And the Russian central bank will try to support the ruble, I'm sure, on a short-term basis. But if you look at what's been happening over the course of the past week and the past month, we've seen significant falls in the value of the ruble. We then see a minor recovery as the Russian central bank steps in and tries to support the value. However, that's becoming more and more expensive. And as the Russian central bank runs out of cash, it's unable to keep supporting the ruble. And so the longer term trend over the past 3 months has been a significant fall. And the ruble is definitely heading back towards 100 against the dollar, which is where it was in August 2023. When President Putin stepped in and told the Russian central bank to do something about it. Now, over that period, since August last year, the Russian central bank has tried to keep supporting it, but it simply isn't able to afford to keep it at the level that President Putin wants. And it'll be really interesting to see what happens over the course of the rest of 2024, whether it does breach that 100 level again, or if the Russian central bank is instructed to go back out and keep it down below that level. But I think in terms of the importance of what we're talking about here, why I've posted this video is because it's giving us live data. It's telling us what's happening in the Russian economy. And the message that it's sending is that the Russian economy is struggling. It's continuing to fall. It's having issues. And that's why the value of the ruble continues to go down. Russia is still trading with India and China. It's still moving lots of oil and gas and coal. However, the payments for all of those sales aren't actually coming back to Russia because of the secondary sanctions threat. And that's causing cash flow issues. And we're starting to see the Russian economy creaking. And it'll be really interesting to see what does happen during the course of the rest of this year, whether or not that situation continues. Because if it does, then Russia and the central bank will genuinely start to run out of cash flow. So this is a liquidity crisis that we're starting to see build up in the Russian economy. So the overall summary of today's video is that the value of the ruble is continuing to fall. It's now falling at a more rapid rate, which tells us that there are continuing and rising problems in the Russian economy. And if the Russian central bank doesn't have enough money to keep supporting the value of the ruble is likely to drift out above 100 against the US dollar. And that tells us that there are serious problems happening in Russia right now. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.